Stop chasing. What's going on, y'all? It's Marcel, aka Honey Money Sunny, and I'm on a mission to make you some money. Listen, before we jump into this video, hit that like, hit that subscribe if you're new, right? Leave a comment below if this video moves you, all right? Now, sizing for zero. I'm just gonna get right into it. It is a lifesaver, right? A lot of people are like, damn, how do I avoid, a trade going against me? I got out too soon. Or, oh, I didn't stay in long enough. We always have that feeling, right? Now, I'm not saying you should, succumb to that feeling, because sometimes you got to, take the 10 to 15%. It just depends on what the market is giving you, especially if you're leveraged with higher amounts of money and you're trying to just get it in a short period of time, right? But sizing for zero is something that can save the day when you're trying to take an early entry on something and you could possibly get caught up in some sort of like delayed reaction or some sort of fake out or something like that, right? So you don't necessarily need to size for zero in every trade. I'm not saying, hey, just roll the dice. Hey, size for zero in every trade. Even though there are some people that use that as a strategy, but when there is a play that looks like it has like the potential to go crazy, then you may want to size for zero, meaning, leverage the full amount that you're willing to lose in order for it to go longer so that you can stay in the trade longer. This is literally the solution to most of your issues, right? I get so many questions and inquiries about, like, how do you know when to get out? How do you know what? Yes, we can identify targets and stuff like that on when to get out, right? But there's still that feeling that you have when something may not go directly to your target, right? Targets don't always get hit 100% of the time, right? Sometimes targets are missed. Sometimes targets are failed by, a miserable amount. And sometimes, which is usually the case, it's just a delayed reaction to get to that target and beyond. So that's where sizing for zero is so critical. Now, I know I've made a video about sizing for zero before, but I wanted to make another video so that I could bring it home for you guys with a real life example that I just experienced today, and the group did as well, in a company called TSM, which is Taiwan Semiconductors, for those who do not know, right? Taiwan Semiconductors. It was a play that we called in our group with one of our little AI friends, our little bots, right? You gotta be in the collective to understand what I'm talking about. But we got a call from our friend, and they were like, TSM is the way. Got into TSM, and immediately we saw, downturn. A lot of people like, maybe this wasn't the right time. A lot of downturn, So I was like, you know what? If it comes to this little area, I'll probably average in. So I averaged down with another contract, but I'm like, you know what? 2 contracts, I'm not looking to, to risk more than that. If I lose it all, cool. I'm fine with that. But the potential that TSM had with the volume, from the order flow that was coming in, I'm like, nah, this is something that could definitely work out. So I held, and then next day, even more downturn, right? I'm just like, all right. And even though I'm sized for zero, I'm still thinking like, should I just get out of it? Because I don't want to just give away money. But then I remembered, I'm like, no, this setup had these things, right? It had this order flow. It was at this particular level. So just honor it. When you're sized for zero, you honor what it is that you see, right? If there is, like I said, some wiggle room that's like slightly below or whatever, you have the freedom to allow that to happen. What this also does is it gives you that skin in the game to really learn market movements and how the market moves in different scenarios. So in this particular case, the reason that we didn't get the move exactly was because we had the Fed meeting coming up, right? The Fed meeting was coming up, so the stocks were behaving in a way that wasn't typical. They weren't necessarily obeying the setups to the T. Some of the setups were getting blown out, right? A lot of people were selling out of their positions, which caused other people to sell out of their positions because nobody wanted to be positioned when Powell was speaking, right? So I saw that and I'm like, you know what? I'm just going to hold. Firstly, because my bias is to the upside after Powell speaks, and I also can just see what people are doing, right? But that order flow was real. Those levels were real, so I'm going to wait it out. Here we are Thursday. Explosion, right? We see TSM go 150% on those options. So even though we were down, wind up putting us up by like 40, 50%. Beautiful trade. Beautiful trade, right? I'm recording this video with a few minutes left in the market. I think I'm going to go ahead and take profits. I still haven't made that decision yet, but I may leave it into the next day. I'll update y'all, with another video later. But again, y'all, sizing for zero, when you are confident in where a trade is going, is how you're going to maximize your profits, right? You're going to stay in longer. You're going to learn about how different effects impact it with real money on the line, but it's money that you've already accepted that you're going to lose, right? If you are willing to lose the full size for zero trade, which is why it has its name, your stock could go way further. So if you were risking $1,000 and your take profit was 10%, $100, and maybe your stop loss was like 20% or something like that, which is a terrible ratio, by the way. But let's just say it was 20%. So $200 you were willing to risk. If you had $200 at play in something like Taiwan Semiconductor, and you just let it stay, right? You would have made a lot more than what you would have made with your normal trade with just $1,000 and then taking profit at that 10%. All right. So this is something that I really want you guys to consider in your trading strategy. I'd recommend just try it like with one of your swings, right? Try it with one of your day trades. Don't do it randomly, right? We're still obeying all of our rules. We're still doing everything in accordance. We are just eliminating the stop loss. That's it. We just taking the stop loss out of our strategy. That's all. Okay. And we're also decreasing the amount that we're putting up. So whatever your stop loss is, it now becomes what you are willing to risk as a whole, the whole leverage. If I put up 1,000 and I'm willing to risk, I'm willing to lose 200, then 200 is what I'm going in the trade with. So you're putting yourself in a position where you cannot lose. You've already accepted a $200 loss. The only thing that can happen is you see, oh, wow, this actually goes all the way to the target, right? When this setup happens and these things are happening, this goes past the target. This is how you start to get, that experience and that intuition and that instinct to know exactly what's going on when certain things are happening. When you see certain things, right? When you get out of trades early, and I'm not saying don't take profits when you're leveraging, larger amounts of money. Yes, when you see profit, you gotta take it when you're leveraging large amounts. Stock options is nothing to play with. But when you're trying to understand how far something can go, you're getting some real market data by staying in those trades longer, right? A lot of times when we take profit, we walk away from the chart. And you're not seeing what else it does. You might see later, like, oh man, it did this. But when you stay in a play, you're like, oh, okay, wow, I've never been on this side of Profit Town before. I've never even seen this side of Profit Town before. You start seeing 100, 200, 300% gains, which just completely dwarfs what you would have made being, super risk off with higher leverage. All right. Try this in your strategy. Let me know how it goes. Again, if you guys do not have a trading family, the Prosperity Collective is the only way, okay? October 1st, we go up on our prices. You can look through my comments and find anybody who's in the group and just ask them, what is your unbiased opinion? What is your honest opinion? And just let them talk. I won't say anything, okay? Now, if that's you, like I said, hit the description below or go find the person first and go talk to them first, and then hit the description in the bio or the link. I'm sorry, hit the link in the description to join the Prosperity Collective, and I'll see you in there. All right, we wrapping this up. Hit subscribe if you haven't already. Like, comment, share. It's always love over here. Listen, invest smart and live free. I'll see you in the next one. Peace.